Well, just stop whatever you're doing right now and listen to this video because this can be the most turning point that you've been waiting. You must have been that time that you've been waiting. Guess what? Once the opportunity shows up, I'm going to go ahead and grab it. I'm going to do something about myself. That might be that video. Just go ahead, relax, watch this video for the next 15 minutes. I'm going to share with you why you should buy shares or stocks right now as we speak. You know why? Of course, you know what happening right now. And maybe perhaps you do not know what is happening. The market or the global markets actually collapsed. And guess what? It's not just the stocks, not about the indexes, but even the cryptos went down. Literally, the commodities, everything just nosedived and went down. Right now, as we speak, I'm really praying as hard as I can to make sure that we do not experience what we experienced on 2008 crisis that was out there. But I'm telling you one thing, this is kind of storm that is happening. And by the way, guess what? I'm making this video on 6th of August 2024, and literally it's on Tuesday. Literally yesterday on Monday, this is when we experienced the crazy things. Markets were actually opening on negatives and negative and negatives. If you go to the Dow Jones, you go to Nasdaq, you go to Frankfurt DAX, you go to things like Nikkei, you go to FTSE of the I'm telling you, the market's actually going down. And anyway, guess what? You can go watch that video that I made explaining why that went down. Today on this video, I'm going to explain things to do with why you should buy stocks right now and why it's the best thing that you can ever do right now. Why? Because remember, there was something that I used to tell you, and I always tell you, and I'm going to remind you on this video. And it's all about never go to shop when everyone is at the shop. And in every storm, because basically this is like a storm, okay? It benefits some people. It depends. Is it you or somebody else? And guess what happens now? Some people are saying we might actually experience sort of a global recession. We never know. But if we do, then it means the recession means that the economies will actually contract, it will actually shrink and goes down, because we use the parameters of GDP to explain our economies and whatever the thing it is, okay? Now, the point is, you don't go to shop when everyone is at the shop, okay? If you go to shop when everyone is at the shop, there is always a demand. And I'm going to use a very simple case scenario, okay? Let's say this is our shop right here. And of course, this is where we are and we would like to go buy. Let's say we are buying something like a bread. Okay, this bread just contextualized with shares or a stock. And then there is what we call, a lot of people want to buy that bread. Guess what happens now? This is a lower supply and demand. Of course, the price of the bread will go high because we have a lot of people who demand that particular thing. So therefore, it means that the price of the bread will actually go high. And of course, if we have less people showing up to this place to buy this particular bread, of course, it means that it will have what we call the less demand. And if there is a less demand, guess what happens now? The price goes down. And that is exactly what happens. Most of the people, should I say average people, who views the percentage or views what we call the investment from an average lenses would say, hey, guess what? Stay away from the market. Market is actually going down. Stay away from it. Panic, whatever. Sell, because people are selling. And when people are selling, it means there is an oversupply of the stocks that are out there that can be bought. And of course, when you have many and we have less people buying, of course, the price goes down. And that particular point or a situation, that is when you show up to the shop to buy when people are not talking about that specific thing. All right, now this is the case. Now, at this particular time, as we are speaking right now, you can go buy your index fund, you can buy your shares, or you can buy your stocks, equities, whatever the thing you call them. For those who do the Bitcoin kind of a thing, for those who do the Ethereum, for those who do the crypto and what have you. And of course, when I talk about crypto, pick that information with a pinch of salt, because why this is an area that you find a lot of people tend to associate it with what you call the scamming and what have you, especially if you come from Africa and such kind of a thing, okay? Of course, when you're buying Bitcoin, make sure that you buy that money that you can afford to lose. We usually call it the affordable loss. Now, here we are. See, whenever we realize that market is actually going down, a lot of people are not showing interest. That's the particular time that you're supposed to go and grab that specific thing. Why? Because you're going to get it as a substantive price, meaning a price that is actually reduced. And that's why you find most of the wealthy people usually buy things, especially when people are selling them. And this is the problem with majority of the people. They tend to be like, hey, guess what? Whenever things are going down, stay away from it. For example, if you're watching this from Kenya, in last year, it was actually our NSE, that is Nairobi Security Market. That's just like the NS, whatever, the United States one, that's the New York one. We have it over here in Kenya, and it was actually voted the worst one. And not only in Africa, but globally, it was voted as the worst one. And everybody was running away from it, was saying, hey, stay away from the Kenyan market, it's not showing good. Of course, it's not really showing good even right now as we speak. But the thing is this, at this particular time, this is the best time to show up to the place and buy those stocks and shares, because they are way low, and therefore it means, you know one thing, when it comes to shares or stocks, well, I'm going to refer to the Kenyan one. See, we usually earn in two ways. There is something that is called the capital gain. There's something called the capital gain, and there's something called what we call the dividends. And of course, most of the people are aware of dividends. Dividends is when you eat the baby money. It's when you eat what we call the passive income. It's when you eat what we call the profit that is being shared by that company that you bought shares from. And of course, your shares are still there, or the stocks are still there. But when it comes to capital gain, this is where most of the big firms, like the hedge funds, usually bank on. They really don't, they're never interested with the dividends, most of them, okay? So what happens is that, let's say the price per share maybe it's around 10 shilling. I'm going to use this as an example. Let's say it's at 10 shilling, okay? Because the market is down and what have you. Then what happens when the market, because the good thing with market is actually recovers. And once it recovers, of course, it assumes what you call the bull market, meaning it goes up. And that case happens, you can actually find this 10 all the way rising up to 15, you know, it can actually go to 20 to 30, whatever the thing it is. Let's say maybe it goes to 20. If it goes to 20, do you know what exactly it has made? It means that your investments has actually doubled. That's true. The investment has actually doubled. Why? Because 20, if you subtract the 2, you actually get 20. So you've gotten what we call the 100% return from your investment. And in Kenya, this is a real thing. This thing happens actually, if you didn't know that. Probably this may not be a reflective to all the countries, but here in Kenya, this actually can actually result. I'm not going to name any company here in Kenya, of course, because I'm not advertising any company to be bought shares in something, unless you need my personal guidance services at a personal level, obviously, of the public. You can always grab that number of mine from the description of this specific video, then I can be able to take you through step by step, explaining to you how you can go about it. Okay, now see, there is a company that their shares actually came all the way from, you can just imagine this, from 13 all the way to 26. That is literally 2x. That is literally, doubling that what you've invested and such kind of a thing. So if you grab this kind of a thing, of course, you have the capital gain. And this is what we call the capital gain. Capital gain is the situation whereby the amount that you used to buy, subtract that what you sell. Of course, the difference is what we call the capital gain. And right now, as we speak, the share price has actually gone up because there are different parameters that are used to actually what we call, to calculate or to be used for you or to determine for you to buy shares. For instance, if you go to something like, price per share, how much you're buying that shares for, there's something called the EPS, earning per share, there's something like 52-week range, there is percentage yield. All those factors are actually, used to when you're actually making a decision when you want to buy your shares or want to buy your stocks. Depends on, Americans, they call it them stocks. In Kenya, we call them shares, Now, of course, you know the reason why. Now, and if you don't know, go ahead and comment on the comment section. Tell me why we call them shares. In America, they call them stocks. And by the way, that calls you for go ahead and make sure that you subscribe to this YouTube channel and make sure that you go ahead and turn that notification bell. Make sure that at least you share this video with your friends out there and share with your relatives, and make sure that at least you comment on the comment section. Now, here we are, and like the video. Now, here we are. See, when I say that this is the best time to buy stocks, it is because the market is going down. The market is down there. And of course, the market will recover. By the way, and I know that we have some people who are skeptical and paranoid, be like, oh my goodness, it cannot recover and what have you. If then that individual witnessed the 2008, nobody knew actually that market. There is even that for, I don't know, it was at around 1912 or something, global crisis or something of sort, the global recession, the great recession, or the greatest crisis, or whatever you guys call it. We still had some kind of a thing on the 2008. We never know. We are living on the unprecedented times. And this is why I always come here to tell you guys, okay? Go ahead and grab, excuse me, go ahead and grab some few shares. And of course, when you're investing in this particular area, of course, invest with that amount of money that you can afford to lose. Because when it comes to investment, you don't put your dear money into the stocks, because you really need to understand these things is actually involved with volatility. It can actually go down, can go up, can have that roller coaster of emotions. Don't be a speculative individual. I always tell people, shares or the stocks are not regarded as a low risk investment. They're regarded as a moderate to high risk. So what you're supposed to do, that money that you invest, put that money that you're at peace with it, is a money that is not a school fees money, it's not a rent money, it's not a fueling car, it's not a for You get what I'm saying? And then you view it from a perspective of a long-term perspective. Because probably you might actually throw your coins out there and then you're expecting maybe a day or a week that money to transform and reach the 20, as Joseph said, and then that is not happening. Actually, you can even buy at 10, it goes back to 8, then literally you've lost like 2. That because you do not have that patience, you are not waiting for the market to recover, because the market usually recover, and then you start withdrawing the loss and then you feel discouraged. This is why I always leave a disclaimer on my description of this specific video, explaining to you at all the time, before you commit your money to an investment, please go ahead and contact your financial advisor, so that at least you can understand before you put your money into this investment. Have you laid the layer of what we call what do we call it, the emergency fund? Have you actually the layer of protection, so that at least in case something happens, you always have that soft landing? Because there are people whom you tell them go buy shares, they go with the everything they have on their savings, boom, they throw it in the stocks. No, we don't do that. We have to do what we call the calculated moves. We have to do what we call the understanding of the market. How has the market been behaving? The company that you're buying, how is it going, and such kind of a thing. But irrespective of all those things, right now when the market goes down is usually the best time that you can grab an opportunity, you can do something, and you can be able to earn as you move to the next level. I hope you don't consume this video just like any other video for entertainment purposes, and then the next time you come here I tell you the stocks has actually, the market, the global market has actually recovered, is actually shooting up there, people are enjoying their cash, and there you are, and you're just complaining. I remember there was a time, again, I'm using Bitcoin. See, the moment I talk about cryptocurrency, I'm very cautious. Okay, I remember there was a time, I think like 2 years ago. Yeah, it's like literally 2 years or 2 point something years ago. There was a time the Bitcoin was around at 12,000 USD. Right now, I mean, assuming that this thing didn't happen, it was around at 66,000. So you can just imagine, close to like 5 times or whatever the thing it is. So go ahead and grab something and do something. And of course, I'm gonna check out and see whether this effect will actually turn out to the mutual funds, the unit trust, the legs of the bills and the bonds, the central banks. So we'll see whether they're gonna reverse the things because of the inflation and what have you. So it's just a game of wait and see. And of course, by God's grace, I'll be here, and by God's will, I'll be here trying the best as I can to share that information with you, so that we can grab the opportunity, because that is exactly what we do here on the Good Joseph's channel. For now, it's a goodbye, and see you in the next one. And again, go ahead, make sure that you always contact your financial advisor to make sure that you pick the good information for you to invest your money. Don't just consume anything and just throw your cash out there. And if you'd like to have a conversation with me in any way, go ahead and grab that number from the description of this specific video. Shoot me a call or text. I can be able to take you step by step for just a cup of coffee's price. For now, it's a goodbye. See you in the next one.